Hello, my fellow Ripplers. This is Chris Miles, your cash flow expert and anti-financial advisor. Welcome to our show that's for you. Those of you that work so hard for your money and you're ready for your money to start working harder for you right now. You want that freedom and cash flow today, right? Not 30 or 40 years from now, but right now. So you can live that life that you love with those that you love. But most importantly, guys, it's not just about getting rich, it's about creating a rich life because as you're blessed financially, you have a greater capacity to bless the lives of those around you. Guys, thank you. Thank you so much for allowing me to create this ripple effect through you by you guys listening and taking this advice and making it work in your lives. It's not, you're not just a hearer of the word, you're a doer as well. Thank you so much for being a part of this today. And thank you so much for spreading the word by sharing this with other people too that need to hear this because financial freedom is no joke. It is something that everybody needs. And you guys can be a huge answer to those people's prayers. Hey, as a reminder, of course, if you want to be able to know if you can create enough passive income to be able to be financially independent quickly, and again, I mean passive income. I don't mean actively creating another business, but passively investing. You can actually go to our calculator at moneyripples.com, go to the website right there. You can actually check out today to see how much passive income you could create in the next 12 months. So check that out now.
Chris Miles was able to retire twice by the time he was 39 years old. But he's not content to just enjoy his own financial freedom and peace of mind. Chris wants you to have your own ripple effect so you can live free today. He's not the financial advisor you expected. He's the anti-financial advisor you deserve. He's jumping behind the mic right now, ready to make waves. Here's Chris Miles.
All right, guys. So I actually want to talk about a question that many times I get asked by my own clients and by the people that come through with Money Ripples, which is, Chris, where are you investing? Okay, so disclaimer I'm putting here. We are giving no investment advice at all. Secondly, just because I've done this doesn't mean you should do it. Thirdly, just because I'm not doing it doesn't mean that there's not an option that is good for you. Okay, so I want to go into what are those investments. I'm going to try to, I bring up some general stuff because there's a lot, but also some specifics too. And really kind of share that with you because what I'm investing in, many of our clients do something, if not the same, they're going to be doing something similar to that. So I really want to talk about where I'm investing my own money and how that applies to me in my situation and for my family. But again, as a warning, a disclaimer, this is not investment advice for you. This is just to give you an example of where I'm putting my money. And I probably will bring up some other places that our clients are putting money too. All right. So first and foremost, right, investments I've done in the past, but maybe I'm not doing currently today as of the recording of this podcast, but I've done before. I've done some actual active real estate investing. I've done flips and things like that. I've actually gone and flipped my own property and bought it back again and, or leased it back and rented it out. I've done things like that. Don't necessarily recommend that strategy. It doesn't always work. And it didn't work great for me either. I've done things even like within the, almost like a very casual version of wholesaling I've done before. I've even done lending as well. And lending is another fun one that could be good. I haven't done that as much lately, but definitely it's a great option for some people depending on the situation. Now, things I do invest in, like right now, I still have turnkey properties. Now, I haven't bought a lot lately, especially as interest rates have risen, but I have been seeing some good turnkey opportunities, especially as interest rates have come back down here in the last few months. It's actually been kind of nice to see that soften towards the end of 2022, where interest rates were much higher before, and that now prices are coming down. Sellers are becoming more, they're nicer about it, aren't they? The sellers aren't, all ego driven, thinking they're going to be able to sell for whatever price. They want buyers. And so it's become a better buyer's market lately, just since, really the end of 2022. But turnkey rentals have been kind of, I'd say, a good staple. Now, it doesn't mean they're always perfect. It doesn't mean that, they always pay out and nothing ever happens. In fact, I could tell you, like, we have some properties are so boring. We're like, wait, do we still have renters in there? Because they pay on time. Nothing ever happens. The property manager takes care of it all. When I do turnkey rentals, I used to do my own active rentals. Don't like that anymore. So turnkey rentals have been more of a fun thing to do where somebody else manages it. But that's the warning. If you have a bad property manager, it can create a bad taste in your mouth. Obviously, there could be vacancies. People could end up not paying your rent. There might be involvement where your property manager has to evict them. There could be some maintenance issues too. There could be some repairs you have to do. We've had a few properties where they weren't great in 2022. because there's maintenance issues and there was an issue with a tenant specifically. My recommendation, if someone's looking to do turnkey rentals like what I'm doing, I would recommend that you buy at least two or three. Okay. Don't just buy the one, because even if you get a good turnkey rental, or it looks like it should be, things can happen. And if that's your only experience, it kind of puts you at risk. Now, someone might say, well, what about duplexes or fourplexes? Yeah, it could be great. But I'll tell you this, even though that's good, it's still in the same geographic region. So if you're just starting out, you might look at single family homes and get them in multiple locations. You might have them in two different states or three different states, just depending on what's going on, just to give yourself a little bit of extra protection there. So, but I'll tell you, that's the one that not only pays decent cash flow, but also there's that element of growth that's possible, especially if there's appreciation, and great tax benefits where you get to keep most of your money. Even if it's apples to apples, what looks like on the cash on cash return between, let's say a turnkey rental and then, lending your money. The thing is, with lending your money, you're going to pay full taxes on that. Where with a turnkey rental, because of depreciation, you might pay little to no tax on that property, depending on the situation. So that's one place that I still like and would still talk to people, even though we do it more cautiously today, that could be a place to really look for good, certain, a real asset that you can invest in. Other places, syndications. I've mentioned that many times before, where you pool your money with other investors and go into deals. I've been in multiple apartment syndications, which have been great. Also in a syndication that deals with like oil and gas, in the oil and gas industry, with getting mineral rights and things like that. That's been a very great investment for us too. And that's even one we did more in the last year to 2 years, especially as the oil prices have come back up. So that's been a great one. Syndications are great, but I'll tell you this as a warning for that: it's about who you invest with more so than what you invest in. I can't stress that enough. Like, the operator, the person that actually doing the deal, is the person you're really investing with. You have to have a lot of trust in them, and you have to make sure that they have a good track record. We'd like the track record to be at least, really, for the last, you know, 12 to 15 years is a good, decent track record where they've at least had some experience with the last recession. Moving into times like now, it's very important that you have good operators that do good work, right? You want that. So you want somebody who has not just good investments that it looks like, and the numbers will look all great, because anybody can make their numbers look great. It's really about that person. What's their integrity or character like when there's a lot of pressure? When they're under pressure, what do they do? It's hard to know that unless they've been through hard times. And that's why it's good if you've had somebody who's been through at least the last great recession of 2008, 2009, 2010. It's much easier to trust them, especially if they had harder times and they were still able to weather that storm and come out stronger, right? So that's my warning with that. But syndication is another place that's very easy, especially with those of our clients that actually have a lot of money. Will tend to do that. Our clients that might have maybe $250,000 to invest, if they have 250,000, they might buy a couple rental properties and then maybe do a syndication as well. And maybe split it, 60-40 or 67-33 or 50-50, just depending on the situation. But it's, if you're usually a 250,000 or less of cash, those two options I just mentioned are usually the go-to, right? I'll go to lending as well. Lending is something you can do directly too. Lending is something that, if you've got investors that are looking to maybe fix and flip a property, kind of risky right now. They have to be really, really good with their numbers, or be in a market that has not been impacted as much by the way that we're seeing right now with the investments, and really with property values even decreasing. Flipping properties can be dangerous. But if they get it with enough equity in the property, even based on current values, you get with enough equity in the property, it could still work out in your favor. So lending can be a great option, and a good short-term option. When I have clients that, they think they only want to have their money out for maybe 6 to 12 months max, that could be a great way to go. Because they know they can get their money back and go and invest it. Again, anything can happen. There's risk with any of these investments, just like there's risk in keeping your money in the crappy stock market, right? There's plenty of risk there, and you can do nothing about it. But at least here, you know who you're investing with, right? You can see them, you know who they are, you build that relationship with them. So again, that relationship is key if you're going to do lending as well. All right, other places. So I mentioned, with syndications, I mentioned with turnkey rentals, and I have multiple syndications there. The last one I'm going to talk about is actually business partnerships. Now I have my business money ripples, which by the way is my number one investment, right? I mean, that is something that, I've put a lot more money and time and energy into in the last few years than I ever have. Well, okay, other than the startup time, but I've definitely put a lot more focus into scaling this, making it bigger, so we can impact more of your lives, and make it grow beyond me, just me. So now I have a team to support me, make sure that this actually grows, and we can serve people with the kind of quality that I expect. And I'm very anal about people having good quality, good communication with their people. That where our clients are being serviced and getting the best possible service. That almost sounded redundant, didn't it? Getting the best service possible. And so, for that reason, I put a lot of money into this business. But there's also other business partnerships you can be doing. And some of these partnerships could be going into real estate. It might be that you partner with one person to go put money together in a real estate deal. So this is not the typical business. Like, I'm not talking about franchises, although that could be a great option too. And we've had clients do that. But this is actually putting your money with another partner, going in as a partner instead of just putting into an investment. Does that make sense? So you guys are pooling your money together, even if it's just two of you. Now, I've done the same thing. I've done this with like buying and selling raw land. I have several friends in this space, and it's kind of an exciting time to do that. Where um, you know raw land is cheap. It's not recession proof by no means, but the payments are low for people if they want to have land. It's great. And so with this particular investment, I'm going to share my screen to kind of show you exactly what it looks like, at least on the back end, with the numbers and everything. So I'm telling you it's legit. I'm actually not just claiming I have assets and I don't. But this one in particular, I'm not doing any active investing. I have a partner doing that. So they're doing the investing. They're the ones finding the properties, helping to essentially buy this raw land for cheap, turn around and sell it to somebody for a higher price, and then we become the bank. So we essentially sell or finance to these properties. So these people, whether they're investors that are buying the properties or just people that want land for recreational vehicles or use, sometimes they just want to expand their current land that they have. Maybe they have a farm or a ranch, allows them to expand more. It could be developers too, and turn around and sell it to them, but then sell it to them on terms so that they pay us like we're the bank. They pay us a mortgage payment, even if it's over the next 5 or 10 years. So let me share this with you right now. So these are kind of the properties that we have. I mean, and people we've sold them to. So the buyers are actually the people we've sold these properties to. You can see, like in this case, bought it for 2,500, but sold it to them for 5,500. The monthly income is $100 a month. So it's kind of cool. 2,500 making $100 a month. Usually, like if I got a turnkey property that I bought for, say, I put $12,000 down, I would hope for at least $100 a month, right? For $12,000 down payment. If you found something that low, not saying you would, I'm just trying to do apples to apples here. That's pretty hard to find, right? It's really hard to find. There's some others too, like as we go along this list here. Now, a lot of these are really like low prices, and I just got lost in all those numbers again. Here's one, that we bought it for 78.85, sold it for over 35,000, getting a payment of 422 a month, right? And that's a 10-year term too. So all of these in total, I mean, we've invested about a quarter million, and that includes the business startup costs and everything else. Quarter million, and now the land's already worth over 400,000. This is after just about a year and a half at this point, and it's now over $7,000 a month of passive income. So not bad for $250,000 being invested. So that's one of those things that we've loved. And just so you know, we'll never bring this person on the podcast. This is only reserved for our own clients that hire us on the one-on-one consulting side. Why? Because there's a wait list already a couple of years long. Okay. So many of our clients that are waiting on this wait list are saying, hey, let's do some short-term lending or something like that. In the meantime, make some money with our money before we can actually go and do this kind of investment. And so very excited about it, but we only connect people that are our clients that hire us for one-on-one consulting. But it's great. We've had a lot of people get good results like we've had too. And we've enjoyed it. In fact, we've been looking to put more money in actually this week. So to even boost those numbers up more, to break it over 10,000 a month. And by the way, we're taking the proceeds, we've been reinvesting it so that eventually we'll try to get to about 20,000 a month or so after about 3 years, So again, just lots of different ways you can do this. Future opportunities that we might be looking at. I know self-storage is one that I'm just starting to see come back with a vengeance here in late 2022, now going to 2023. So that's one that we're starting to look more intently at with some of our are deal operators that are in that space. Again, you have to make sure you're with somebody that does it right. But that's another space that, I think it's some great potential. I think even the apartment space, even though it's cooled off a bit and I haven't been putting more money in much into apartments, that's something I think we're going to start seeing come back, whether it's apartments, retail space, whatever it might be. But again, it's not about what you're investing in as it is who you're investing with. That is so important. That is what's critical. That's what's key. So my advice to you is this: if you've got 100,000 or less, the best thing you can do is just look at infinite banking. By the way, I have a lot of money in infinite banking too that I store and I put money in. I live the same thing. Anything that I'm teaching about here, I'm doing too. Like I can't teach something that I don't do because I sound like an idiot when I try to do it. Okay. But infinite banking is another one that if you've got $100,000 or less, and even if you have more too, but if that's all you have, I wouldn't even worry so much about passive income right now. Don't even try to go into that space yet. Now, if you get over 100,000, maybe should be chatting more. But when you're about 100,000 or less, that's where infinite banking is a great place to keep storing that money, building it up, and there's ways to use it. I mean, we've got a sponsor on the show. You could technically go and invest with a minimum $1,000. Okay, and that's fantastic if you can do that. And make some good returns on that. But again, I don't want you to just throw every dollar you have, especially your emergency fund money and things like that, into an investment to then now, if anything bad were to happen, you're you're up the creek, right? You're broke. We don't want that. And so you want to protect and those cash reserves that you have. That's where the infinite banking can be great to help diversify your cash reserves, diversify your savings. So you're earning better than point nothing percent in your bank. You're actually earning better than online savings accounts, even. So you have that kind of option, and you get tax advantages too, where there's no taxes taken out. It grows tax free, comes out tax free. So that's what I recommend there. Now, if you got between 100,000 plus, especially when you get up towards the 200,000 plus, this is when we should start talking because now there's more options. That's when I mentioned like where turnkey rentals could be good and having maybe some syndications mixed in there. If I were to default to anything, turnkey rentals, at least you own the property, it's yours, you control it, it's a real asset. Even if renters stop paying you, you can turn around and sell it, those kind of things. You have real assets, it's much easier to deal with. But obviously syndications can work too, depending on the amount of money you have. Now, if you have over a quarter million, maybe a quarter to a half million, now you can start looking more like doing a few more deals. Maybe you might be looking at something like with that partnership, like I did. That could be an option where you still get other investments too, but then you have something like that to help you also grow and increase your cash flow as well. You can even do some lending. You can do other syndications. If you're over $500,000 or more, guys, there's so much there. In this case, this is where we talk about diversifying more. I have some of those clients where they have at least that much money. They're trying to put a bunch of money in like one of our oil mineral rights investments. And there we just say, hey guys, don't put everything in that one basket, especially with that one operator. Let's diversify a little bit. Yeah, put some money there. That's great. But some of them had to talk back like, boy, guys, like I can't give you investment advice, but that's a big risky position, especially when they go above like a third of their money into one deal. That's pretty risky, and I don't know if I would feel comfortable doing that, but again, it's up to them. But that's one thing we can do. Still, I think having rentals as part of your portfolio is a must. I think you should have at least some properties in your portfolio. It can even be short-term rentals too, right? You can do some of those things. But then you start mixing more of the syndications and things like that. You can get really creative and do a lot of different things with your money. Now, depending on how active you want to be with it, you might put it into something that pays you more longer term. I have, some of our clients will focus and say, you know what, that 10% or that 11% fund, I'll just put money there because it's just stable income that comes in and we can reinvest it every 5 years. So we don't have to keep managing it. Great. That could be a great option for you. Again, I'm not giving you any investment advice, nor do we give our clients specific investment advice as well. We stay away from being investment advisors. We don't cross that line. But depending on your goals and what you're trying to do, if you're trying to grow your money, it might connect you with different people, different operators saying, hey, these investments are actually more growth oriented, or these investments are more cash flow oriented. They're creating passive income maybe in the near future versus the long run. You might want to look at that. I will tell you this, with the way the markets have been, I personally have been doing this, and I would definitely see that there's less risk this way, is you focus on cash flow, not just on investments that might grow or might have a big payout down the road. Those can be pretty risky. We don't know what values will be like down the road. We can't guess anything, right? Because markets can change, things can change, and that can throw off those projections. You want something that, even if it has growth down the road, has good, strong cash flow today, too. I think cash flow is the number one thing I try to really teach our clients to look for. Doesn't mean you have to have something that's paying you cash flow right now, but it's nice to know that you have some of that money coming back that you can then turn around and reinvest and make more money with it. So, guys, my advice to you is nothing. My advice is this: like, if you guys are in the situation where you say, I've got at least, maybe a couple 100,000 or more, what do I do with this? Reach out to us, reach out to us at moneyripples.com, see what we can do for you there. Like, that's something where there could be some really good stuff that you could be investing in. Right. And again, going for people that, not just what you're investing in, but who you're investing with. Make sure you go with people that have been vetted well. Every deal is different, so you have to vet every deal. But we try to provide the education, that support, really walk with you side by side so you can find those right deals. Again, we're not on those people's payrolls, so we can kind of say honestly, hey, there's some risk with this. Here's the pros and the cons of what you're looking at here. But it gives you a little bit more guidance and direction on, what kind of investments are you looking for, and who would be a person that's been in that field, that's been doing this for maybe the last 12, 15 plus years, that's had a great track record. So again, we're not giving an investment advice at all. We are not investment advisors, but we are here to support you any way possible. If you want greater support and be able to help shorten those timeframes to get to your goals faster than you are right now, reach out to us at moneyripples.com. Guys, make it a wonderful and prosperous week. And we'd love to keep serving you, make 1,000 of you financially independent by the year 2030, if not more. I'd love it to be you too. Make it a great day.